Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
It's a mixed picture so far that the Asian markets are projecting.
China will firmly stand with India.
25% because of the Russian oil.
Support stands at 24,925. It's moved a little bit. It's a 40-hourly exponential moving average. It's moved up a little. 25,070 on the Nifty. So this is actually pretty flat, right? Nothing at all.
Effort seems to be on reviving consumption demand.
Benchmark indices are down close to about 0.7%, snapping a 6-day winning streak.
Both the NSE as well as FTSE will go ahead and announce the changes as far as the respective indices are concerned.
Next year, you will have 3 quarters of incremental revenues that can add 2.1%.
It wants to cap the hike or the increase which insurance companies can take in a year or otherwise as far as health insurance premiums are concerned.
They've collected rare earth magnets in adequate quantities and they are well set for the festive seasons.
We're down in today's trade. We're still holding on to 24,900.
Okay, we're starting the program a little later than usual, but you had that very important L&T interview, and L&T Real Estate as a separate listed business, that I think towards the end of the program, to the end of that interview came out as a sharp news point. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. It's a bit of a bad day, 200 points lower with 60 minutes to go for close. I'm Prashant. With me, my colleagues Reema and Surbika. Hi, afternoon.
Hi. It's a bad day after 6 days of gains, right?
Yeah.
So we're still up about 1% on the Nifty for the week, 2% up for the mid-cap index.
Absolutely, but I guess the bulls also want to preserve whatever little gains they've got in the last couple of days, because today we've gone back to being an underperforming market. Most of Asian markets have been actually holding on with the gains. Europe is managing a bit of green as well. But yeah, and the thing is we're breaking the day's lows now. So let's see, next 60 minutes, plenty of action coming up.
Absolutely. I was saying, I think in the morning I was saying, yesterday, right? We were saying every day we start 5 days up, 6 days up, to whisper it. Nazar lag gayi, I think. But 6 days, right? I mean, the market went up. So it's, I mean, you get a down kind of a session as well. Next week, by the way, is a holiday shortened week. From Wednesday is a market holiday. And by the way, Wednesday is also the deadline for that 25% additional tariff, Trump tariffs, which we kind of forgot about it, right? But, I mean, that deadline, the tariff deadline is also looming. And at least from the looks of it, from what we are hearing, there's not very much, which is changing, at least not before the 27th. But we'll see. I'd just like to quickly run you through what's coming up here. So markets, of course, are down. And we'll talk about that, get you lots of perspective. But we also will talk about the health insurance space. ICICI Lombard is, I think, one of the big F&O losers. We'll also have New India Assurance in focus, Niva Bupa, etc. There's an exclusive story. Yash joins us for that. Defense stocks are buzzing. So smaller ones, Apollo Micro, you had DCX Systems, Premier Explosives, and Ria will join in with some information there. Brokerage Corner, we discuss some of the top calls. You had Mazgaon and Divi's, which we've been highlighting from before market opened. And of course, eye on the Nifty and FTSE rebalance today. 2 new companies, Max and Indigo, look to enter the Nifty 50 index. So there's a fair bit which is lined up here as we start. By the way, if you have the Nifty intraday, we are actually almost exactly, actually now we're below it. The 40-hourly exponential average is about 20 points off. That's the first kind of support, but we're trading below it now. That was the first support that we put out. We'll see if there's a close below it or by close over the next 60 minutes, there is some recovery afoot or not. But it's interesting. The Nifty Bank got to daily averages and it kind of sort of went sideways. The Nifty yesterday got to an important retracement. It almost hit the 61.8% retracement. Came within 7-8 points of it. That is 25,160. The high yesterday was 25,153. And here we are seeing some bit of profit taking, some bit of correction as well. So that's the overall picture, which is very much in focus.
Indeed, the Nifty is now below 24,900. The sensex has slipped 650 points, 0.8% lower. Broad-based selling scenes. The metal index is down over 1%. The banking index, FMCG, all three down close to about 1%. And even IT is on the back foot. Sectorally, there's not much which is in the green except pharma, which is higher for the second day in a row. The Nifty Pharma Index gained about 1.5% yesterday. And today there is follow-on buying seen in names like Sun Pharma, Dr. Reddy's. So in the green. M&M stands out as the top Nifty gainer. On the way down, you've got Grasim, Asian Paints, Adani Enterprises, Hero MotoCorp, ITC. These are some stocks with cuts as deep as about 2.5%.
Yeah, so that's the large cap screen. Mid caps are actually having a much better day. And defense is one such story for sure. By the way, we were pointing out a couple of names. I was not at Apollo Hospitals. It was Apollo Microsystems. That was the other stock. DCX is one that's been up and about. And we'll talk about this, the whole buzz in defense in just a bit. Aside of that, yeah, that's the stock that we were actually referring to. It's up because they've got a small order from DRDO. So we'll talk about this as we go forward. There's buying in AB fashion and retail. Just some examples of where mid-cap and small-cap activity is quite palpable. Then there is Z Entertainment. It's finding some takers this afternoon, about 5%, 4.5% up on Z at this point in time. And then some newsmakers here and there. A smaller company called R Systems, which has made an acquisition. That stock has been up right from the morning. So even on a lackluster day, even as large cap stocks are cooling off, mid caps are still looking not too bad. So how should you position yourself for this last hour of trade? We have Nagraj Shetty joining in from HDFC Securities with some ideas. Nagraj, great to have you on. What would you advise people, especially people if they had open long positions in the Nifty, looking at today's decline? What are the important levels? And then, of course, any stock ideas for the last hour?
Hi, good afternoon, Surabhi. Nifty has encountered a strong resistance around somewhere around 25,150 levels and witnessed selling pressure. The way market has bounced back from the lows of around 24,350 and the opening upside gap and the strength building up of the strength is indicating the current weakness is going to be short-lived and could be a buy on dips opportunity. I'm expecting Nifty to bounce back from near the support of around 24,800 to 24,700 band, which is the important gap support which was found on 18th of August. So it's going to be a buy on dips opportunity. We could see Nifty bouncing back from the lower levels towards the resistance of around 25,100 again.
What about stocks, Nagraj?
I have two stocks. First one is Indus Tower. We have seen some tremendous selling pressure in Indus Tower a few months back. Later, it has formed an important bottom reversal around 330 and bounced back, showing some sign of rounding bottom type formation. Currently trading around 352, 353 levels. One can look to buy at this point of time. Upside target would be around 363, and one can place a stop loss of 342. Second one is SJVN. SJVN has been in a larger consolidation. We have seen some accumulation going on around 90, 94 levels. Currently placed at the hurdle of around 200 DMA, and I'm expecting the overall chart pattern is indicating there is a possibility of decisive upside breakout of the 200-day EMA. Currently trading around 99.60 levels. One can look to buy at CMP, and upside target would be around 106, which is going to be an immediate target, and one can place a stop loss at 96.
By the way, Indus Stars is higher because Vodafone Idea is up in trade. This is on the back of a Mint report which says that the PMO has received an informal note from the DOT, Department of Telecommunication, proposing some relief options for Vodafone Idea. So one of the options, going by the report, suggests including a 2-year pause on paying the statutory dues under the moratorium, maybe give Vodafone Idea more time to repay the dues, smaller annual payouts, a waiver on penalties, interest pay penalties. Some options are being proposed. So an informal note, according to Mint, has gone from the DOT to the PMO, and now perhaps it rests with the PMO. So that's the report, which has got Vodafone Idea excited, and conversely, you've got that gain in Indus Stars as well. But moving on now to a CNBC-TV18 exclusive. Sources tell the channel that the insurance regulator is considering a proposal to cap health insurance premium at product as well as portfolio level. Yash joins in with the details.
Well, that's correct. So this is a very important development that we are picking up. What we've been given to understand from our sources is that the insurance regulator, IRDAI, is considering a proposal under which it is looking to cap how much health insurance premiums can insurance companies hike in a year. Essentially, a similar move was taken by the regulator very recently, where it said that insurance companies cannot hike more than 10% of the health insurance premiums for senior citizens, and now a similar move is being considered when it comes to the younger sections of insured population as well. What we've been given to understand is that this particular cap, as far as insurance premium hike is concerned, is being discussed to be implemented on at both stages. One is the portfolio level, which is the health insurance portfolio or the health insurance book, as well as product or policy level, where individual policies or products, also there could be a cap as far as premium hike there is concerned. Also, in terms of the reasons why the regulator is considering this particular proposal is concerned, we've been given to understand that the regulator has three important reasons why it thinks a proposal of this sort should be implemented. The first reason is that it has come across multiple instances where a particular health insurance policy is introduced in the market at a very low premium, but then at the time of the renewal, the premiums are hiked significantly, and the policyholder who buys this policy surrenders his old policy and now is left with no option but to pay those higher premiums for renewing this existing policy. The second reason is insurers are looking to offset the restriction on hiking prices for senior citizens with significant or higher hikes for younger sections of population to sort of not let that happen. The regulator is considering this proposal. And finally, the regulator feels that there is a lack of insurance companies focus on reducing expenses and bringing operational efficiency. Rather, they are depending more on premium hikes. So to avoid that also and not let that happen also, the regulator is currently considering this very important proposal.
Yash, just a quick thing. Now, when insurers want to hike premiums on health policies, they need a IRDA approval, right?
No, they do not require an IRDA approval when it comes to hiking prices on insurance products.
Right. Because the last hike, I remember, was a very steep one, 30-35% hike. But that's because you didn't have a hike for 2-3 years.
Correct. So there are different ways in insurance companies look at this. Some do not hike for multiple years, 2 to 3 years, and then take a very significant hike in the fourth year to onboard customers, the most number of customers that they can in those 2-3 years. And some do it regularly every year, depending on the medical inflation. So, of course, both those things will get regulated if a proposal of this sort is to be implemented.
That's good news for...
Great news for policy buyers.
Right? Absolutely.
But for stocks, what does it mean for stocks? What does it mean for profitability and just the whole model? Well, let's discuss this with Dharmesh Kant. He is joining us on the show this afternoon. Dharmesh, great to have you on. The stocks are reacting, some of them. Star Health has actually turned around now. Earlier, Star Health was also slightly lower. Lombard is falling almost 2.5% right now. If this were to come true, then it perhaps really raises questions. And then you go back to depending on the government or the regulator rather to clear any kind of premium hike.
Yeah, Gautam, Survey, thanks for having me on the show. Government is walking the talk of the fiduciary capacity in which they have been acting, and it's in all directions, in all the verticals and sections of the economy and the business operations. They are going deep down and checking where the things should be in the ethical way. I think, this is subjective and qualitative both in the nature. We don't know which are the companies who have, followed this kind of a mechanism. That data must be lying with the government to prove and substantiate on that. But meanwhile, till the time this has been cleared, it's definitely a sentimental, negative on the companies. And the second course of action would be, if you have found such kind of a practices, whether there will be any penal measures or something like that. If that is coming, then, there's some more correction there in the offing. But having said that, if you look at the numbers gone by in Q1 and the previous quarter, that was Q4 of FY25, those numbers were pretty decent and the traction has been pretty well for most of the insurance companies and the penetration levels has been going up. So we are on the sidelines, we are watching this space very closely. And one more point I would like to highlight here, that GST thing is being talked about. But I don't think, any change in GST will induce a policy buyer to buy a policy. If you are buying a policy, then you are buying a policy. And GST rates are very, minimal as compared to, the type of premium you have been paying for your policy. So that is more determinant, the type of premium and the coverage that policy ensures. So net, I think one has to wait for all this clarity to come out and look out for government where the, fiduciary capacity is getting activated.
Do you like any stock at this point? Health insurance, general insurance?
We like on the life insurance side, and LIC, that is Life Insurance Corporation of India. That is one company which we like very much, and this purely on the basis of valuation multiples, where this company is sitting at with an ROE of almost 55 to 60%, far higher than their peer group of 15 to 17% kind of an ROE. Largest market share, and the traction has been pretty decent. They are also growing at 13-14% as compared to the other players as far as new insurance premiums are concerned. So there, I think the only overhang is the government holding out there. That percentage has to come down to 75%. And that overhang of higher government shareholding as of now and more liquidity coming into the market can be, dampener for 1 or 2 years. But if you are a buyer for, say, 5-7 years, then it's definitely a multi-bagger from here on.
Got that. Let's talk about defense stocks. A lot of them are higher in trade. Ria now joins in. She's compiled some of the recent news flows and the triggers.
Well, yes, we are seeing some fresh buying coming into the sector today, although there's very little news flow when it comes to most of these names. And in fact, we're seeing big moves on a lot of these smaller private players. First up, looking at Apollo Micro, this one is up over 14% today. And yesterday, the company had announced its L1 status for orders worth about rupees 25 crores from the DRDO and from some defense PSUs as well. The current order book of the company stands at about rupees 735 crores at the end of Q1 of FY26. And this order book is expected to triple by the end of this fiscal. Now, the stock today has hit an all-time high, up around 100% in 2025 so far, and this is the 6th consecutive day of gains for the stock. And in fact, today 7 crore shares have been traded so far versus its 20-day average of around 22 lakhs. So big move on Apollo Micro. For Idea Forge, this one is also up around 8 to 10% in its biggest intraday advance since the 9th of May. 46 lakh shares traded so far, which is 14% higher than its 30-day average. And although the stock is still down about 18% on a year-to-date basis. PTC Industries is another one that has been in focus today. Right now, it's trading with gains of about 3% off its day's high of an 8% gain. Yesterday, it had announced an order worth about rupees 110 crores from BrahMos Aerospace for the supply of critical titanium castings. And today, some other movers include DCX Systems 9% up, Premier Explosives up 6%, and even Astra Micro, Solar Industries and Zentech around 2.5% of a move on each of these. Just looking at the valuations quickly for all of these stocks, only 4 out of the 17 stocks of the defense pack that we've looked at are currently trading below their respective 3-year average Ps, and these include Zentech, Idea Forge, Paras Defense and Data Patterns. And in terms of the stock moves for all of these, most of these stocks are still down anywhere between 13 to 45% of their respective 52-week highs, with the exception of Apollo Micro that made a fresh all-time high today of rupees 340.
Okay, so the valuations continue to be fairly elevated for most of these names in the defense pack. Got it, Ria. And today is a good day for the tier 2 names. Actually, even BEL from the large cap screen is up and about, but it's more about the tier 2 stocks that are buzzing around Idea Forge. We'll in fact play out a quick soundbite on Idea Forge in a bit. Our colleague Madiha had a conversation with the company's management. We'll get to that in just a bit. But before I toss it back to Dharmesh, while we're talking about a lot of these smaller defense names buzz around today, there is a report on Mazgaon Dock and a negative note actually that came in from JP Morgan. So we should take cognizance of that as well. JPM is quite conservative on Mazgaon. They have an underweight rating and they're saying that risk reward remains adverse despite the stock price correction. And they're saying that large awards like the P-75 Scorpion submarine, they could be delayed. So basically, they don't expect big pickup. And in fact, they think that there could be some downside risks to earnings estimates going towards FY27 and 28. So while there are the buzzers on the upside, there is a negative report on Mazgaon on the downside. Dharmesh, defense is always an exciting playground, but you have to be cautious. Like a colleague pointed out, I mean, valuations are still perhaps pretty elevated. What do you like? And specifically a word on Mazgaon. What you made of this JP Morgan view, whether you're negative or positive?
Yes, Obi. I mean, as far as this JP Morgan view is there, it's very, subjective in nature. It depends upon how you are looking at things. And observations like there can be a slowdown or, execution may falter and delays may be there. But these are very generic kind of an observation which cannot be substantiated on the basis of data or the past history. So I'm not buying that theory at all, that there could be a problem. And looking at, shipbuilders, Mazgaon is the cheapest and the best performing stock, and the valuation multiple is the safest bet to play on if you are playing that sector as well. Having said that, one has to be careful. I mean, mindful of the fact that these are long gestation period kind of one ship gets 2.5 to 3 years to get built, especially the submarines one. So there you can have few quarters or a couple of years where the numbers may not look that pretty or rosy to justify the valuations. But if you're looking at 5 to 7 years, it's always there. The counter which we have been like, I mean, we have been liking defense space for a while, and news flows will keep on coming, order inflows will keep on happening, and the days when it will be announced, you have a price action playing out. HL, we have been a consistent, bias in that. We have been recommending that to our clients on a regular basis. Same with BEL. And DCX, we have covered earlier. We had an initiating coverage on that. Only to highlight about DCX, last year was a washout. They did not do anything on the numbers front. Execution was pretty bad. And this year as well, the Q1 was bad. But if you look at the order book, which they are standing on, around 2,700 crores of order book is there. Out of that, 600 plus crores is from Elta System, 800 plus crores is from Lockheed Martin, and 1,200 plus crores from Larsen & Toubro. They also have BEL, Rafale Advanced System, 13 each crore odd each. So we have been trying to reach management to find out how things are likely to progress. Hopefully, we will be able to get on with them next week. But usually second half of the year is always better for D6 system. 1,000 crores of cash is like in the balance sheet. So in the mid cap, small cap space, though the valuations are pretty high, but if one is looking at, buying opportunity, I think DCX offers a solid risk reward ratio and a higher margin of safety to play this stock with. It's basically a PCB assembly and testing kind of a company. So I think I have recommended this on your channel as well as 250 or 252 kind of a level. So if somebody is invested, they should stay invested in it.
Okay, stay invested, 267, 270 on DCX. Paytm is the next one we want to talk about. And so stock's done well, and that kind of, people, just look at what's happened, right? 20% this month. And there have been several triggers, of course, over the last couple of months or so. It's a Chinese investor and financial getting out. But is there perhaps more coming in terms of triggers, etc.? We just don't know. Although there is a fair bit of buzz around. Gaurav is here. What we can do is to tell you what has happened so far with regards to the price performance and, of course, the news flow, which is turned around for Paytm. Gaurav, take it away.
Well, yes, when we look at the share price of Paytm, it has been a roller coaster ride, we could say, because the share, which was as high as 1,600 rupees while listing, came as low as 340 rupees. So let's understand what has happened. In November 2022, first RBI imposed restrictions on online merchant onboarding. That was the first setback the company saw. Second is that in Jan 2024, there we saw a huge setback because RBI asked Paytm Payment Bank to stop all their all the businesses, and that is the reason why we saw the stock went down as low as 340 rupees. In fact, there was also some concern around the investor Anfin, who had stake as high as 25%. And the third overhang that we have always seen in the stock is the profit. Paytm was struggling to report the profit after taxes operationally. Those were the reasons why there were concerns around the stock. But FY26 seems to be like a turnaround story, because in the last 1 month itself, the stock has gone up almost by 20%, and in the last 6 months, the stock has shown around 70% returns. So there are overhangs which are actually not there anymore. First is that the recently company received the permission from RBI, because of which now they can actually onboard merchants online. Second is that the Anfin, which was another overhang, now they have reduced their investing almost to 0% versus what it was at 25%. So two overhangs. First is that the RBI embargo, which has been partially lifted, and second is the investors overhang. Third is that the profit, company has turned profitable. In fact, they reported 120 crores of profit in first quarter of FY26, and this is operational profit. So all these things are actually playing out very well for the stock. In fact, when we look at the stock performance, it is up even in today's trading day session. We don't know what is going to happen in the next few weeks, but definitely it seems that investors are also being a little bullish about the stock because of all the fundamental changes that we have seen in the stock so far.
All right, Gaurav, thank you very much for that. 30 seconds, Dharmesh, is there more, if there has to be repair in terms of regulatory action or otherwise, anything else which can turn for this? Or this is now kind of steady state and, it takes time to improve from here?
Yeah, thanks, Fasal. I think it would be more of a steady state with a couple of good days of, bounces. It's nearing to its IPO listing price. But I think things are falling in place for Paytm, and they are having a good cash in the balance sheet. 15,000 odd crores of cash is there. So most of the profitability is being lifted by other income, but operating profit has come through. So let's give one more quarter to Paytm before taking on a larger fundamental call on it.
Yeah. No, got it. Dharmesh, we'll leave it there. Thank you very much for joining us. Good speaking with you and appreciate it. I think we're around 180 points on the Nifty, 24,894. So essentially where we were at 230 when we started this program. Vaibhav Sanghvi should be with us on the other side. Stay tuned. Coming up.
Welcome back. 3 o'clock. Before we get the conversation going with Vaibhav, just a quick run-through for the big buzzers of the day. As always, Hormaz is here with the latest screen action. Hormaz, what's cooking on Friday?
Oh, lots cooking among a lot of the companies. And we start off with one name that Prashant highlighted in the morning, that was Ismo. And is a second straight day of an upper circuit of 20%. It was up 20 yesterday, up another 20 today. And yesterday's gains came on the back of around 5 lakh shares traded. Today's circuit has come on the back of 25 lakh shares traded compared to a 20-day average of just 1.5 lakh in comparison. Now, because of this 2-day move, the stock is up almost 60% in the month of August and has turned positive for 2025. And this comes on the back of the stock doubling last year and more than tripling in 2023. The other one on the list today is KRN Heat Exchangers. That is also a recent listing. It listed in October of last year. It snapped a 2-day losing streak today, up 9%, gained the most since last month. 27 lakh shares traded today, 20-day average average of 5 lakh, and from its IPO price of 220, the stock is up over 4x in just 10 months of its listing. Now, Dhani Services is the other one. It's gained in 3 out of the last 4 sessions, and it's up another 7.5 today, and that comes on the back of more than 1.5 crore shares changing hands compared to a 20-day average of around about 20 lakh. But it's been an underperformer this year. In fact, it's been an underperformer over the last 5 years also. In 4 out of the last 5 years, the stock has delivered negative returns. So that's Dhani Services for you. And lastly, Foseco India, we highlighted this stock on Wednesday as well, and today the stock is buzzing on the back of the acquisition that it announced earlier in the day. 1.5 lakh shares traded compared to a 20-day average of 23,000, and interestingly, 4 sessions before the acquisition announcement, going into today's trade, the stock was already up 24%. So a lot of news related announcements, but the interesting bit, all through, the stocks are buzzing on very, very heavy volumes.
Got that. Thank you very much for that. Vaibhav Sanghvi, CEO at Ask Head Solutions, is now joining in. Vaibhav, we've largely been range-bound now for a long time. We fell in April, we managed to recover, we declined a bit. Again, markets are trying to make a bit of a comeback, but broadly we've been in a range. What has been your approach to markets, and how's your portfolio shaping up right now?
So, Rima, I think from a portfolio standpoint, reflecting the current market conditions, which is, as you rightly mentioned, pretty much range bound. I think we are, running a very tight portfolio in that perspective, from a long short perspective. Having said that, I think when you look at the markets, our view is currently that markets will continue to be range bound till we see a decisive movement of FPI starting to invest back into, India. At this point in time, we are seeing rebalancing from an emerging market standpoint towards China, Korea, Taiwan. So we'll wait when it kind of stabilizes, and probably, a couple of rate cuts from Fed should do the trick in that sense.
So when you say it's a tight portfolio, what exactly do you mean?
I think from a net exposure perspective, I think we would continue to, maintain our net positions, which are, very narrow in that sense, right? Having said that, the GST announcements, which have kind of come about, has made us, slightly more optimist, from a portfolio standpoint, wherein we may probably increase some amount of our exposure in a limited way. But on an overall basis, we do think that once we break out of the range on a convincing basis is when, secularly our exposures will likely go up.
Vaibhav, hi, good to have you on. Last time we spoke, we discussed a couple of themes and sectors, and you had liked financials even back then. But just run us through the biggest overweights right now for you in the portfolio, and within financials, what part of it? Is it tier 1 banks, private, PSU? Is it non-banks? What do you like?
So, Sylvia, I think in our conversations earlier as well, we did mention very, vocally in that sense that consumption is a theme we like from a 12 to 24 months perspective. We continue with that view. In addition to that, I think when you mentioned about financials, we like more from a financial services. And when we talk about financial services, it's like an AMC companies, who kind of, are looking at good business model. Of course, they have kind of rallied quite a bit. So probably at some correction, we will look at that again. But from a banking perspective, we do think that the two top private banks or few top private banks are some, where you can probably look to have an exposure. Having said that, we'll wait for, any indication in terms of the rate cuts, which may probably happen going forward. And if the rate cuts kind of happen, then you may see one odd quarter more of pain in terms of the net interest margins. And that is where we would probably say that, once that is out is when you go pretty much secularly bullish in terms of the banks at that point in time.
Vaibhav, what is the sense you get from, the UHNI money that you manage and, that client of that category of investors that you speak with? Is there a lot of money that's waiting to come in? I mean, waiting for some sort of evidence of maybe a turnaround in earnings, or do you think largely people are deployed and therefore the market is squarely resting on domestic mutual fund flows now?
Of course, Subi, I think in all our conversations, right, over the past 2 to 3 years, the amount of exposures from a portfolio standpoint towards equities as an asset class has definitely seen some good size uptick. So which means that they are kind of invested, fairly from a portfolio standpoint. And when you're looking from an overall portfolio, surely their financial advisors would be advising from an overall asset allocation, wherein they would definitely need to have some amount of exposure to your fixed income or any of those kind of hybrid instruments as well. So all in all, while the overall exposure from portfolio standpoint has gone up in terms of an equity, the SIPs, to be very honest, from a larger retail kind of universe is kind of still kind of helping. So HNIs, I think they're fairly exposed. It's just that their incremental money is coming from broader, retail investors.
Thank you. We leave the conversation here. Thank you for joining in. Enjoy your weekend as well. Let's move on now. Nimesh is now joining in for a favorite D Street Chatter segment. He'll get us an insight into what dealing rooms are doing, saying, and talk about stocks too. Nimesh.
I remind a bit of a down day, and largely that is dragged by the financials. And I'm not too sure how much of the Bank Nifty fall today has to do with the Bank Nifty rebalancing as well, because some of the weights of some large banks are going to come down. So maybe that's impacting the Nifty Bank today. But largely the broader market seems to be quite okay. The breadth is quite fine. It's been positive as well. And even the flow seems to be quite mixed. Not much is what I understand in terms of selling pressure. A couple of things to watch out for. Technically, we are slightly below that very crucial resistance of 24,950. So that's one thing. But again, the PCR has fallen back to below 0.8 levels. Normally below 7 is when market tends to bottom out. So that's something to keep in mind in the next week to come forward. But largely a down on the Nifty and the Bank Nifty, but the broader market seems to be fine, and there is buying interest as well from large institutions, especially in the broader market stocks.
Okay, yeah, broader market's doing much better than the large caps today in image. What about names, buzzers and chatter on the radar?
So the first stock on my list is Hexaware Technologies. You've seen some ICs in the last couple of days and weeks, and the stock has been buzzing as well on the back of those reports. But I understand there could be a very large block deal in Hexaware very soon. The seller could be the potential, promoter could be the seller entity is what I understand. So that's the first stock. Second stock is Dixon Technologies. Again, that's been buzzing in trade today. There was a Motilal Oswal report as well in the morning, and they've raised the target price marginally. But for Dixon and for other EMS companies, the next big trigger would be the cabinet approval for the ISM2, which is the semiconductor program. So that's something which is going to come very soon is the buzz. So that's why those stocks are buzzing, and so is Dixon as well. The third name is Z Entertainment. After a long time, some bit of buying this seems to be back in Z Entertainment as well. I understand there are very strong buy flows at FIDS, so which has been a bit of a change in the last few weeks. We've not heard that. So a bit of change there, and hence an up move in that name in today's market. And the last one is Shell Engineering. A big move in that stock in the last 1 week or so up. I guess it's up more than 10%. And again, for Shell Engineering, there's a very strong buzz that maybe you're going to hear a large order win for the company very soon. So that's a trigger as far as Shell is concerned.
Thank you very much for that. Get into a break. On the other side, we'll get you a few BTST calls from our experts.
Three, four, five. 1, 2, 3, 4. 1, 2, 3, 4. 1, 2, 3, 4, 5.
Welcome back. The Nifty still below 24,900 with a cut of 200 points. Let's find out the action from the futures and options space. Nigel joins in.
Well, Reema, the big problem about today is the way the Nifty bank has crumbled. It was trying to get past the 56,000 odd mark. That hasn't happened. And just take a look at the way the Nifty bank has fallen. What's happened right now is there's massive open interest built up. So the shorts, they're back in the system out here. One would be hoping that, this could be a blessing in disguise, because once it gets its act together, this index is heavily shorted. So that's point number one. Point number two, on the Nifty was trying to hold on to the 24,900 odd mark. That's broken down. And now the fear is maybe, in fact, the retest of the 20 DMA. So that's something that is closer around 120 points away from current levels. We'll be keeping an eye out on that mark. The PCR, it went all the way to around 1.32 sessions ago. It's back down to around 0.75. The reason it's come back down to 0.75 is because the call writers, they're back at play. 25,000 call. Take a look at the massive open interest built up out there. But from noon onwards, the 24,900 call as well, the open interest built up is massive out there. So the bears, they believe they're back in the game. They believe this 25,050, 25,100 mark, which has got rejected numerous times, they can hold on to that. And they want to defend that 25,100 mark from where we started off earlier today. Moving to stocks that are moving around, well, you have ABFRL. That stock, in fact, is in focus. There's a bit of an open interest, there's a bit of a short covering bounce that's playing out on ABFRL. I think we should get that stock up for you on the screen. That's the one that exits the F&O, later this month itself. So that one's seeing a short covering bounce today. Fresh shorts, though, getting added into Ultratech Cement as well as on InfoEdge. Both of them, massive open interest build up. Both those stocks are lower. While there is a bit of a short covering bounce that's playing out on Indus Stars, the one that has underperformed the market in the last 1 month or so. But there are hopes that maybe a Vodafone Idea will survive. And that's why that one, in fact, is coming for a bit of a short covering bounce. One stock that came out of the F&O band, which is going back into the F&O band, is Titagar. Because, I was looking at it, open interest build up is massive. Should make its way back into the F&O band. Back to you.
Thank you very much for that. Next week, a couple of important events. One, remember, it's a truncated week. On Wednesday, Indian markets are shut on account of Ganesh Chaturthi. But that's also the time where the 50% tariff from US onto India becomes effective. On Friday, you've got the India GDP data, which will be out at 4 p.m. That's Q1 of FY26. And secondly, the Reliance AGM, which starts at 2 p.m. So these would be some of the big events to watch out for. Nagraj Shetty from HDFC Securities is now joining in for a few calls that you can take forward for the weekend. Nagraj?
Yes, I'm continuing with the view on Nifty. Nothing has changed over the last 30 minutes. Market, I'm expecting Nifty to bounce back from near the support of around 24,700 odd levels. 800 to 700 is the band where I'm expecting Nifty to bounce back from the lower side, and it's going to be a buy and dip supposed to be at the lows. Right now, I have discussed the stocks, Indus Tower and SJVN. They are looking positive. One can look to buy at this point of time, as discussed the levels. And another one stock from a defense side, Avantel. Avantel is the one looking very attractive right now on the charts. It has broken above the resistance of downtrend line on the large time frame charts and looking higher. Currently trading around 150. The overall chart pattern is looking positive. For the short term, I think for the next session, this upside momentum is likely to continue. And 160 is going to be the next hurdles to be watched for the stock at least for early next week.
Okay. Nagraj, thank you very much for joining in. You have a good weekend and we'll connect again soon. Let's now put the spotlight on the changes, the NSE index changes that are likely to take place today. And even FTSE is going to be rebalancing some of its indices. Vivek is here with the latest details. Vivek.
Important day as far as passive indices are concerned. Both the NSE as well as FTSE will go ahead and announce the changes as far as the respective indices are concerned. Remember, yesterday we had highlighted about the likely inclusion and exclusion candidates of the Nifty 50. Reiterating that, Nifty 50, you could see two new entrants. Max Healthcare and Indigo are the likely inclusion candidates. Max Healthcare could see inflows of close to $400 million, while Indigo could see inflows of close to $600 million. The two constituents that could make the way for these two names are IndusInd Bank and Hero Motor. IndusInd Bank could see outflows of close to $230 million, while Hero Motor could see outflows of close to $300 million. Now coming to FTSE, the key index that we track here is the FTSE All World Index. Quite a few stocks are expected to make their entrance into the FTSE All World Index. The names are Cohance, JK Cement, expect to see inflows of close to $75 million, Chola Finance, Hexaware, KPR Mill, Narayana Hrudayalaya, Optum Investment, Godfrey Phillips, as well as MCX. Remember, MCX could see inflows of close to $58 million. These estimates, these inclusion candidates, are broker estimates, and it'll be interesting to see which are the names that make the cut in this particular index reval event.
Thank you. All eyes will also be on Federal Reserve Chair Jerome Powell's speech at Jackson Hole, as investors will be seeking cues on the path forward for monetary policy. This perhaps would be his last one. CNBC's Steve Leisman joins in with what's on the table.
There is definitely talk in the hallways here about the Lisa Cook allegations, but the more important focus for investors is the speech by Fed Chair Jay Powell, and he faces a difficult task. Among the issues that he has to deal with is possibly discussing changes to the long-term strategy that could be announced as soon as tomorrow, presidential and market pressure for a rate cut, higher inflation numbers, as well as softer labor market data, and a divided Fed on the issue of those rate cuts. On the divided Fed, Kansas City Fed President Jeff Schmidt telling CNBC that he's open to a cut, but continues to be concerned about inflation.
It seems like that last mile is pretty hard, I'm one of a lot of folks that believe that there's a real hard, true cost to that last % of inflation that's in the system. I think that we might see a tick up. I would say that it's probably the inflation number is probably closer to 3 than it is 2, and I think we've got some work to do.
So how does Powell finesse all this in his speech? Well, first of all, let the data talk. There is more data between now and that September meeting that could adjust market expectations for him. Suggest a cut is possible, but not necessarily promise. Not abandon the 2% inflation target, even while the Fed is away from it. And say that perhaps the Fed is still restrictive even after a 25 basis point cut, and try to limit the expectations to not more than one cut. Futures markets still have an 80% chance of a rate cut in September, but there's a 20% probability of no cut, and that's risen in recent days. So there is some hedging out there in the market that Powell won't very clearly deliver that dovish guidance that markets seem to want.
Okay, so that's the big event that markets will train their eyes on come next week. I mean, we'll have the announcements over the weekend, and then on Monday, of course, we'll get a reaction to it. We'll take a quick break on that note. More on the markets in just a bit.
Welcome back. The mid-cap index ends with relatively lesser cuts, right? The mid-cap index is down close to about 0.2%, while the Nifty and the Sensex are down nearly about 0.9%. Lots of individual stocks are higher. Apollo Microsystems 14% up. Aditya Birla Fashion and Retail, where there has been some management changes. The street is excited. Vodafone Idea, street is hopeful that some relief will come through. Sagility, today there was a Kotak Institutional Equity note which wrote about BPOs. Sagility was one of them. JM Financial, L&T Finance are a couple of other NBFCs. Mayuresh Joshi, Director Research at MarketSmith India, is now with us on the show. Mayuresh, thanks for joining in. Give us one interesting idea that popped up on your radar this week.
Afternoon, Rima. I think one was Uno Minda, which we discussed, I think, at the beginning of this week. The other one, I think, remains similarly from the auto ancillary pack itself. And we've got Bosch also, one of the auto ancillaries on our watch list. I think it is showing a very, very strong rating as far as the price rating is concerned at MarketSmith India. But as far as the fundamentals are concerned, I think reverting back both to its EBIT margin performance with strong expectations in terms of top line growth, expectations of a very strong margin performance going forward, because input costs have largely stabilized for the whole universe. And therefore, I think recoupment of EBIT margins particularly, should probably help bottom line growth quite significantly. So I think within auto anchors, I think both these names, Uno Minda is something that we've recently added in our model portfolios, and Bosch is something that we are keeping on our watches.
Okay, so auto ancillaries, interesting name. Mayuresh, hi. You know, earlier in the show, we were just debating this recovery in Paytm, and it's been quite stellar, right? This week, the stock is up 10%. It's up, I think, 20% over this month. What's your sense? Is the worst behind? I mean, does it make sense to enter in now? Or do you think this is still maybe not too clear, the path ahead and the recovery ahead?
Afternoon, Surabhi. But I think a lot of the headwinds that Paytm was probably facing from a regulatory perspective related to onboarding of merchants, as an example, then the online payments that basically beleaguered its operations almost a year and a half back. And everything probably seems to come back on track. And therefore, I think the price action that you're probably seeing is a large testimony to the expectations that the street is probably now laying out. With most of these headwinds going through, including the stake sale, a large part of that has already happened in terms of the overhang that existed in terms of supply of Paytm as a stock from the promoter or the from Manfred side. I think a large part of that is largely behind us. And therefore, I think the street will now look forward with everything that has happened positively. How does that reflect on numbers? Ex ESOP costs. So I think ex ESOP costs, if the numbers show significant signs of improvement, I think there will be re-rating around the corner. But the street will ideally like to watch out for Survey, how Q2 numbers play out, what is the guidance given, and whether there is a stark improvement in terms of what the management had guided for and what it actually delivered. So from a price perspective, I think it has recovered most of the deterioration that it had faced. In our opinion at MarketSmith, again, I think the price action has been a little bit too strong. Our own sense is that it might actually just consolidate unless we get clarity from Q2 numbers. If they're relatively better, I think there is no two ways. I think the street will take it with both hands.
And finally, one more stock which really made headlines this week, and that was Ola Electric because of the price action, right? Ola had that one big day, it was up almost 15%. It's actually ending with a gain of 13, almost 14% for the week, though it's down today, Ola Electric. Buy, avoid, hold?
No, you're not buying it. Not at this juncture, at least. So I think a large part of that move will be for the rationale that we are giving out is has taken place in terms of expectations of what might come in Q2. Again, the management sounds very, very optimistic in terms of delivery when it comes to the EBIT performance, the bottom line as well over the next few quarters. But again, I think the proof in the pudding is the numbers. So I think if the numbers are relatively better, even if the price moves higher, I think you've got sufficient enough confidence that the management is delivering on what they're probably hoping to do. And let's have a look at the landscape. Within the unorganized space, I think they're facing immense competition. The organized players have come out with fantastic platforms as well as far as the EVs are concerned. And therefore, I think from a sales perspective, from a distribution perspective, from an after-sales perspective, all the issues that had beleaguered Ola Electric, I think the bigger players are probably doing all these things in the right way.
All right. Okay, Mayuresh, shorter conversation today, but thank you very much for joining in. We leave you now to enjoy your weekend. Thanks so much for chipping in with those views on a couple of stocks. Well, we are down to the last minute of trade this week and, of course, for today. And it's an end with a bit of caution. 1% lower on the Nifty, which means the Nifty has halved its weekly gain to almost 1% itself. Today, it was all about large cap selling. So if you look at the weak names on the Nifty, it's across the board, really. I mean, Grasim, Asian Paints, Adani Enterprises, Ultratech Cement, there's Tata Steel. So it's not any one sector that's led the market down. There's just general overall large cap profit taking that we've seen across the board. IT names like TCS, HCL Tech on the lower side. Then you have banking names like HDFC Bank, SBI. They have been weak. Reliance has been down about 1% as well. So you can see it's just overall pretty much everywhere. ICICI Bank lower by about 0.7% as well. Not too many gainers today to speak of. Two auto names stood out, Maruti and Mahindra, where the gains were at least more than 0.5%. In terms of mid-cap action, slightly better on the mid-cap index. And the gainers on the defense space, they were quite noticeable, particularly names like Zen Technologies, IdeaForge, DCX Systems. These were stocks up between 5, 6, 7%. So quite a bit of buzz over there. But otherwise, fairly quiet for most parts of the mid-cap market as well. So quiet end to a week where the Nifty did take aim at 25,000, but it hasn't had a close above that mark. So let's see if the bulls can prevail next week or not. Well, it's a wrap on this edition of Closing Bell. So it's a goodbye from the team that puts this show together. But don't go anywhere because we have Editors Roundtable up next with the action ahead.